What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. And we are back today with a crucial market update as USDT, the largest stablecoin issuer, has depegged from the dollar at the same time that they have frozen FTX's USDT wallet address. Then we have Sam Bankman-Fried finally being exposed for how much of his users' funds he did trade over at ALAMEDA Research. And last but not least, we do have to talk about Crypto.com that is officially releasing a full proof of their reserves. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Friday, everyone. If you've not yet hit that sub, happy Friday, everyone. I hope despite the wild week in the crypto markets that you all had another successful week in your personal lives. I'm wishing you all an amazing weekend ahead. And if you have not yet hit that sub, like, and notification bell and join the Everything Crypto Squad, please consider doing so. And I love and appreciate you all. And with that, we're going to hop right in here with the question of the day. And today's question is, do you think the bottom is in after this most recent capitulation phase? Let me know in the YouTube comments down below. And I am very curious to hear what you guys do have to say about this. But first, we are going to hop into the charts here, starting off with Bitcoin, which did see a massive move yesterday based on the CPI data, which we will break down in just a couple of minutes. But I do want to take some time to look at these charts and really just give you guys a reminder that even after the outsized move we did make on Bitcoin yesterday, we are still below the June lows that we printed at 17.5K. We are effectively still at multi-year lows here for Bitcoin. So while that move was nice to see, do not let it fool you. Do not think that that is some sort of massive reversal off of the capitulation that was not warranted. I think the capitulation and fear in the markets was completely warranted based on what happened with FTX. And the unfortunate truth is the move today in the crypto markets was not specific to crypto. The Nasdaq was up 7.5%. The S&P up 5.5%. This was not a crypto specific move. This was based on the CPI data. So no, I don't think that crypto is out of the hot water yet. And to answer my own question at the beginning of the video, I don't believe that we have seen the lows. I think we do at least come in for a revisit of the lows, given the fact that, yeah, there's still a lot to really be unwound when it comes to this entire FTX thing, and we have no idea what can happen in the coming days. Now, additionally, if I actually remove all of the lines from the chart here for a second, you guys are going to notice that we are still well below that 200-week moving average, which is sitting right now at 23.8K. Now, from current prices of 17.3K, that would actually require Bitcoin to make a move of 37.5% to the upside to get back just to retest the 200-week moving average, never mind closing a weekly candle above it. And the reason that is so significant is because if you actually take a look here, you can see that since 2016, 2017, Bitcoin has not really spent any time below the 200-week moving average, even in the midst of the 2018 bear market. You can see that in 2020, we briefly wicked below it and then just came right back above it, and we proceeded to rally into the 2020 and 2021 bull market. And now you can see here that we have been below this 200-week moving average. I mean, we had a fake out here in August above it, but really ever since we broke down here in early June, we have just been below the 200-week moving average constantly. So Bitcoin is in uncharted territories. Unfortunately, the economy is also not looking super hot at the moment. And that does not even get us started on what literally just happened with FTX, what the ripple effect of this will be in the coming months, not to mention the Bitcoin miners who are still experiencing a massive squeeze at the moment as well. So yes, definitely still tons that this market does need to sort out before I really consider that maybe we are beginning to flip bullish again. But despite what is happening in the near term, long term, yes, I am still very bullish on crypto. That is why I continue to dollar cost average regardless. But I do also think that it would be a little bit ignorant to ignore what is happening right now in the broader scheme of things. And that is what I'm here to fill you guys in on. So we're going to get into the inflation data now, as consumer prices rose 0.4% in October, which was less than expected. And we are now sitting at 7.7% on the CPI index. It may appear that we did in fact peak at that 9% level here back in June of this year. And keep in mind that at the same time, while we have seen sort of a steady decline here since June, I mean, we're not out of the hot water here yet. We're still at 7.7% inflation. And for perspective, in the beginning of 2020, we were at 2.5%, 2%. So Definitely still not a super hot look here in terms of that inflation data. I do think that the market was just incredibly oversold, that people were looking for any reason to sort of give the markets a bounce, and seeing the inflation data come in lower than expected definitely did give them the excuse that we were looking for to sort of rally here. But as reflected by this quote, 1 month of data does not make victory. I think it's important to look at the broader picture here and not just a month over month average. And the Fed has also restated their commitment to getting inflation back down to this 2% level. So reminder that given the fact that we are at 7.7% at the moment, there is still a long way to go in terms of this demand destruction. And I don't think the Fed is going to ease off anytime soon personally. Now, the one reason that people are suggesting we may rally is because there generally is a rally post midterms. And that is, one indicator that we could say, yes, based on history, we could see a rally here. But I would argue that while we may see a rally in the stock market, we probably will not see it in the crypto market, as there is just a lot of stuff that still does need to sort itself out. Oh my gosh, maybe I need to sort my words out here first, but there's still a lot of stuff that does need to sort itself out within the crypto market. And honestly, I do have a lot of Bitcoin and Ethereum news to get through with you guys, but I think I'm going to put that on the back burner for today and really just focus on what is happening here with FTX and ALAMEDA Research and USDT and another exchange halting withdrawals, because there's a lot to cover on this front, and I want to fill you guys in on what exactly is happening, as Thursday was a very revealing day for what exactly FTX was up to and what led to their downfall. So for starters, it was revealed that FTX tapped into customer accounts to fund their risky bets over at ALAMEDA Research, obviously both of which are owned by Sam Bankman-Fried, and their chief executives told investors this week that an affiliated trading firm owes the crypto exchange about $10 billion. So FTX extended loans to ALAMEDA using money that customers had deposited on the exchange for trading purposes, a decision that Mr. Bankman-Fried described as a poor judgment call. You think? One of the people said. ALAMEDA also took additional loans from other financial firms, according to people familiar with the matter. As of Monday, ALAMEDA owed $1.5 billion in loans to counterparties outside of FTX, the people said. So ALAMEDA actually owing about 15% more on top of what they had already taken from customer assets at FTX, to the tune of $10 billion. So about $11.5 billion in the hole. Now, after being exposed for pretty much using his customers' assets to fund his own risky trades, Sam Bankman-Fried finally took to Twitter issuing an apology. And to be honest, right off the bat, I mean, given the fact that just a couple of days before FTX was exposed for being insolvent, that Sam Bankman-Fried was on Twitter saying that, quote unquote, a competitor is trying to go after us with false rumors, FTX is fine, assets are fine. I mean, given the fact that he waited until he was finally exposed, until all of the cards came tumbling down to apologize, this is not an apology that I would be inclined to believe or accept whatsoever. But anyways, this is what he had to say, and I'm not going to read the whole thing, but just summarize the key points. So he says here, I'm sorry, that's the biggest thing. I effed up and should have done better. I also should have been communicating more very recently. Transparently, my hands were tied during the duration of the possible Binance deal. I was not particularly allowed to say much publicly, but of course it's on me that we ended up there in the first place. So here's an update on where things are, clarifying this is all about FTX International, the non-US exchange, and that FTX users are fine, FTX US users are fine. And this is where the apology sort of turns from an apology into just kind of like a pity party, which is honestly horrifying to see based on what this man has done to the crypto community. So he says here that he effectively underestimated his leverage to liquidity on the FTX platform, you think? And he says, so I was off twice, which tells me a lot of things, both specifically and generally, that I was SHIT at. And a third time, I'm not communicating enough. I should have said more. I'm sorry. I was slammed with things to do and didn't give updates to you all. And so we are where we are, which sucks, and that's on me. I'm sorry. Like, nobody cares about your pity party right now, man. You just lost billions of dollars of users' funds, and he has not even addressed the fact here that he was using FTX to fund ALAMEDA Research. So once again, really just deflecting from the main problem on this platform. It was not his leverage to liquidity estimates, because if he had not used these customers' assets to trade on with his other companies, this would never have been a problem in the first place, because inherently all of his assets would have been backed one-to-one. So he says right here that they're spending the week trying to do everything they can to raise liquidity. I can't make any promises about that, but I'm going to try and give anything I have to if I will make it work. And I don't know who's going to want to help FTX raise liquidity, especially after Binance walked away from a deal. If the #1 crypto exchange in the world is walking away from supporting FTX right now, I find it very unlikely that any other exchanges or even financial institutions are going to want to. He said there are a number of players who we are in talks with, LOIs, term sheets, etc. A non-binding LOI is exactly what Binance had when they were potentially going to acquire FTX, and we all know how that turned out. So he basically says here that they are going to use every single penny they do get through fundraising, assuming that they do get that fundraising for users' funds. And I mean, honestly, that's about it, guys. It was pretty much a nothing burger at the moment. Sort of like a pity party more than an apology, to be honest, and not one that I found super productive. So really just trying to damage control here in case his exchange does end up going back online, in case customers are able to access their assets once again. But at the moment, not looking super hot for FTX. And as if things could not get bad enough for the crypto markets here, we also saw USDT, the largest stablecoin issuer by market cap, actually depeg today, going down from that 0.9999 cents to the dollar, all the way down to 0.98 to the US dollar. And actually on some exchanges, it did drop as low as 0.95 according to CoinDesk. Now, why is this a massive issue? Well, for starters, do keep in mind that Tether makes up 68 billion of the crypto market cap, and at the moment that crypto market cap is sitting at, what's it at, 829 bill. So right off the bat, Tether makes up about 7 to 8% of the total crypto market cap. And yes, an implosion over at Tether would definitely not fare well for the industry as a whole. Unfortunately, though, it is not just a depegging that could cause a massive bank run on Tether, as they have also gone ahead and frozen 46 million of USDT held by FTX following law enforcement requests. So they said here that we are starting to receive requests from law enforcement to temporarily freeze assets while an investigation occurs. A Tether executive told CoinDesk. A Tether spokesperson told CoinDesk via email, while we cannot specifically comment, Tether routinely has open dialogue with law enforcement agencies, including the U.S. Department of Justice, as part of our commitment to cooperation, transparency, and accountability. So what does this sound very familiar to? Well, you guys may remember earlier this year when Circle blacklisted 45 plus Ethereum addresses in line with US sanctions, when we did see this ban on Tornado Cash. Now, Tether did release a statement basically saying that they were not going to be participating in these US sanctions and freezing Ethereum addresses. And we specifically said back then that Tether has frozen addresses before, and just because they have not done so yet, or rather they had not at the time of the Tornado Cash incident, do not put it past them to do it again. Now, I haven't really seen Tether get as much hate for this as USDC did at the time that they froze wallet addresses. And the reason being is that obviously the community was on the side of the Tornado Cash people who had their addresses banned, while right now the community is against FTX. But at the end of the day, guys, it does not change the concerning precedents that this sets. The fact that even the stablecoin issuers can freeze your wallet addresses and effectively lock your funds. If they can do that to you, what makes them any different from a bank? Nothing whatsoever. So, to be honest, I get the question all the time of like how much of my portfolio is in stablecoins. I don't hold stablecoins. I actually do feel more comfortable holding cash than stablecoins for this exact reason right here, because USDC and USDT can effectively freeze your wallet address without any warrant if they want to, without any reason. All they can say is that they're in compliance with US sanctions or law enforcement, and that's all they have to tell you. And it is written in their clause that they are able to do so. So you give them permission to freeze your address holding your USDC or USDT when you actually purchase these stable coins. And I definitely thought that this is something that sort of would be, more the center of attention given what happened with USDC back in August. But the matter of fact is that we have now seen the two largest stablecoin providers have to actually freeze addresses throughout this bear market. And once again, definitely not a very good look for the industry, especially from stable coins. These are supposed to be stable, safe. Nobody cares if they're stable if you're being locked away from your funds, and not to mention the fact that even USDT lost its peg today. So Yeah, I mean, those are super concerning pieces of news on both parts. And once again, I think it's kind of flying under the radar right now, but I do believe that eventually people are going to wake up to the fact that even the stablecoin providers are incredibly centralized and they will freeze your funds if they have to. But in the meantime, I do hope that at least they are working towards some sort of a solution or actually moving this tether back into the accounts of customers instead of just keeping it locked up on the FTX side where they cannot do anything with those funds. And it has not even been a week. It has not even been a full... And given the fact that it's not even been a full 5 days since the entire fallout of FTX, it's pretty surprising that we are already seeing the ripple effects of this on the broader industry. And the first one here comes in the form of BlockFi. So you guys may remember that back in June, BlockFi received a $250 million credit facility from FTX, and the proceeds were to be used to actually fulfill client balances across all accounts. So they did announce that they were going to get this $250 million revolving credit facility from FTX to bolster their balance sheet and their platform strength. And this obviously was, when Sam Bankman-Fried was on his buying spree here back for these distraught crypto companies, including Voyager, as well as BlockFi. And basically, they did cite here that this was as a result of the downturn of Three Arrows Capital. And yeah, they also announced here they were cutting about 20% of their workforce at the time. So this was pretty much the first straw that bit the camel's back, right? We had Celsius go ahead and announce that they were filing for bankruptcy. Then Voyager announced they were filing for bankruptcy. We had Three Arrows Capital collapse, and this caused massive ripple effects in the market, which then hit BlockFi over here, who did have exposure. So then we had FTX step in, who went ahead and gave BlockFi this $250 million credit facility, and they really were being touted, or Sam Bankman-Fried was really being touted as like a hero, as a savior for the crypto industry. We warned you guys against this, that he was definitely up to some shady things for his own self-benefit and the benefit of the FTX platform. And it turns out that he was actually loaning them with $250 million worth of money that he did not have. So the question becomes, if BlockFi got a $250 million loan from FTX they did not have, and now FTX is bankrupt, what happens to that $250 million? And more importantly, what happens to BlockFi? And we got that answer today. So for starters here, we saw that BlockFi announced Silvergate, our US banking partner, will be observing the federal holiday Veterans Day on November 11th. As a result of this planned third-party closure, ACH and wire transfer transactions scheduled for 11/11 will not process until November 14th. So right off the bat, I mean, given the fact that they were announcing this 19 hours ago, definitely a lot of people were concerned and suspicious of what was happening over at BlockFi, who did have exposure to FTX with that revolving credit facility. And it was in fact confirmed today. They say here, we are shocked and dismayed by the news regarding FTX and Alameda. We, like the rest of the world, found out about the situation through Twitter. Given the lack of clarity on the status of FTX.com, FTX US, and Alameda, we are not able to operate business as usual. Our priority has been and will continue to be to protect our clients and their interests. Until there is further clarity, we are limiting platform activity, including pausing client withdrawals as allowed under our terms. Thank you for clarifying that it is allowed under your terms. We will share more specifics as soon as possible. We request that clients do not deposit to BlockFi wallet or interest accounts at this time. We intend to communicate as frequently as possible going forward, but anticipate that this will be less frequent than what our clients and other stakeholders are used to. So they're going to be communicating as frequently as possible, but pretty much said to expect less frequent communication. So withdrawals have been paused. Communication is effectively going, almost going dark at this point, given the fact that they have confirmed they're not going to be as active as they do try to sort this out. And this is an incredibly bad look, given the fact that Flory Marquez, she actually said 2 days ago that all BlockFi products are fully operational and that BlockFi is an independent business entity regardless of that line of credit from FTX and will remain independent until at least July 2023. So yeah, now we have BlockFi halting their withdrawals. Once again, a perfect example of the ripple effects of what is happening right now in the markets. So definitely very unfortunate to see. And what's even worse is that I don't believe this is going to be the last one. So we are going to have to see how this plays out. I think BlockFi is just one of the first that will kind of come to light with their exposure to FTX. Once again, guys, please get yourself a cold storage wallet. I cannot say it enough. It is not for me. I have no monetary incentive or gain in asking you guys to get a cold storage wallet. That is all for you and your own true ownership of your assets, because holding it on these exchanges is clearly no better than holding your money in a bank. In fact, it's worse given what we have seen this past year. At least the banks are regulated. These crypto exchanges can do whatever they want with your funds, and that is definitely concerning. But one company that I do actually trust in terms of a centralized exchange is in fact Crypto.com and Binance, of course. And Crypto.com here did announce that following what has happened, they're going to publish the list of cold wallet addresses and balance for major assets within 24 hours for full transparency. Now, right off the bat, you guys may notice there is a leak going around on Twitter that their portfolio's top 3 holdings are pretty much made up of a third CRO, a third SHIB, and a third Ethereum. And right off the bat, guys, do not assume this to be true. We've not seen any confirmation from the Crypto.com team themselves. A lot of people are fudding this and saying that this is a terrible look for the platform. Guys, this is not even confirmed yet. And you're telling me that Crypto.com has none of their balance in stablecoins? I call BS. I think they definitely have majority of their reserves in stablecoins and CRO. So I definitely do look forward to seeing what they have on their balance sheet. But once again, this just goes to show you that Crypto.com is really trying to set the standard here in terms of that regulatory approval and that transparency. And I think they have been very successful in doing it so far. We have covered that they've been getting massive amounts of regulatory approval in the UK, Australia, Dubai, Cyprus, Italy, Greece, Ontario. Like, the list just goes on, and they are doing it the right way, because nobody cares about regulation or compliance until this happens. Until exchanges start crumbling left, right, and center. And that is when people start to give a crap about exchanges actually being transparent and having the appropriate security and compliance measures in place. And given what has happened with FTX, you better bet that a lot of people that are new to crypto that may be entering the space may now be hesitant given what has happened over the past couple of weeks. And that is where Crypto.com can step in and boast their fully transparent, their fully compliant and regulated platform. And that will definitely bode very well for them in the next bull run, in my opinion. So I hope you guys did enjoy the content in today's video. This was definitely much of a shorter video, but to be honest, I just wanted to get into the important stuff today as there was way too much to cover. Now we're going to get back into sort of like the regular Bitcoin and Ethereum news tomorrow, as I do think that now the rest of the FTX and Binance situation is just going to have to play out. I think that this week was definitely, the most news heavy week. There has been a lot going on, but I do hope that here on the channel we could keep you guys up to date on all of the wild stuff happening in the markets. So I hope you all have an amazing Friday. I'm wishing you all an amazing weekend ahead, and I hope to catch you in the next one. Peace out for now.